Gold is down today. Price is pulling back this morning. Still trading in the 950 range. Joining me now from Toronto, Barrick Gold CEO Arron Regent. Good morning, Mr. Regent. It's good to see you.
Good morning.
We're all trying to figure out why gold has made this latest run, and most of us tie it to the dollar. You would know better than most people what's happening, whether it's supply and demand or whether it's financial. Well, what do you think is responsible?
Well, look, I think there's a number of different factors that are at play. First, I think gold in times of uncertainty performs well. It's a safe haven type investment. And I think what's happened in the past year or so has reasserted gold as a good diversifier in a portfolio. So I think the attractiveness of gold has continued to be realized. And then if you look at the policy response of governments around the world to the financial crisis, with the amount of increased liquidity in the system and inflationary concerns that's creating, again, that's creating a heightened interest in gold, which is really, I think, causing more buying, and obviously that's having a positive impact on the price.
You didn't really mention supply and demand, jewelry, whether central banks are selling or buying. I mean, there's so many things that are involved. Is there anything in the supply and demand dynamics that means a move over 1,000 is coming?
Well, I think it's quite interesting when you look at happening from a demand perspective. The role of gold and the attitude towards gold is changing. You've seen the central banks who were traditionally large sellers of gold, and they had a quota system in terms of how much gold they would sell on an annual basis. But in fact, they've been selling less than what they've agreed to under that quota system. In fact, some other central banks, such as China, have been buying gold. So from a supply perspective, that's obviously reduced the amount of gold that's available. From the industry's perspective, the industry is really challenged not only to try to grow production but maintain production, and so supply from the industry is actually coming down as well. Jewelry demand is off, particularly out of India. We've seen the volumes of consumption come down quite significantly on a unit basis, but when you look at the dollar value, the actual dollar value being invested is up. But a lot of that reduction in jewelry demand is being offset by investment demand, and we've seen increased investments in the ETFs, for example, and as I said, by other central banks buying.
You view the gold stocks like your stock. Do you view that as the dog, the tail?
Sorry, I didn't quite understand that.
The gold stocks, are they leading indicators of where the metal's going or vice versa? Because I don't know why your stock is right in the middle of its range. You got gold at historic highs, and you're at 34. You got a high of 52 and a low of 17. Why isn't your stock trading near its high with gold at its high?
That's a great question. I think our stock should be trading better than where it is today. There are probably some company-specific factors that are at play. For example, our production profile, we're in a period of time during 2009 where our production is off a bit from last year. As we have some older mines which are phasing down, we're bringing on some new mines. Our production profile will be increasing next year, and our cash costs will be continuing to decline. So, I think our stock's off a little bit because of that, but I think that will be rectified as we continue to show increased transparency in our production and cost profile into 2010 and 2011. So I think given that backdrop, I think our stock should perform, should have some good upside potential.
Yeah, we were very familiar with how your stock has traded over the last month from that chart. I wish we had this year one, which would show us 17 to 52. Back to that question, though. Historically, what moves first, the gold stocks or gold from watching it over the years?
I think that I don't know if there's. I think they kind of trade in tandem in some respects. It's very easy to see the gold price rises, $5 or $10, and you see all the gold stocks rise alongside that. So I'm not sure that one's more of a leading indicator than the other. I think they're just very highly correlated. So if the gold price is up, then obviously you expect all the gold stocks to follow.
And we're back to figuring out why it's not near a high. Any more consolidation down the pike?
I think that if you look at how the industry is structured, you have a handful of large companies who and like most organizations, you're trying to grow your production base. And so I would anticipate that there will be a fair amount of M&A activity as those companies try to buy smaller companies to augment their production profile. To the extent seeing some of the majors get together, it's really hard to say, and I'd just be speculating.
Do you expect it within the next 2 or 3 years, given what you're seeing coming out of Washington down here in this country, would you forecast $1,500 gold? I mean, it seems like we deserve it, $2,000 gold.
It's very difficult to say whether it's going to be $1,500, $2,000, or $1,200. But I think that one thing that's important to highlight is the gold industry is a relatively small industry. And so when you look at capital movements, if you just have a small movement of capital into the gold industry, there's not a whole lot to buy. And so as a consequence of that, you could see some pretty explosive impact on pricing if there's again, just a modest shift in asset allocations within portfolios. So what does that mean? Could it be 1,200, 15, 2,000? It could very well be. I guess the story that we would say is that there's a lot of price supportive factors out there, some of which we've already talked about, and because of that, and because of the concern about the implications of the government's policy response to the financial crisis, because of that, there is a significant and growing interest in diversifying portfolio and getting exposure to gold.
You hedging at all?
We're not hedging. We have a policy with respect to our gold sales not to hedge.
Okay.
We do have some legacy positions that we're managing, but no new hedging. Not on the gold side. Some of our input costs we'll manage and hedge, whether it be oil, currencies, or things like that.
All right. We appreciate your time, Mr. Regent. I think we're going to lose the window, satellite window. Thank you. We'll see you soon.